We make selection criteria and research and select nonprofit organizations to donate to. And finally, for our fourth step, education, we have finance and investment lectures, internal reading clubs, invited talks, and study groups. So now let's move on to our announcement portions. These aren't new announcements, so I'll go over these. Number one, we are looking for new advisors. So we are seeking both student and adult advisors to join our team, and you don't need to have a background in finance. What matters is their experience in organizing student-led nonprofit initiatives. So as of December 6th, we have two parent advisors joining us, and I will introduce them at our first meeting of the new year. Uh, for our second announcement, we're also on the lookout for innovative and creative fundraising ideas. So if you have any suggestions or strategies, I'd love to hear from you. You can email me if you want. Some examples are like a reading club, which everyone could take part in to host, a yard sale, tutoring, etc. We are also currently considering nonprofit organizations and projects that can benefit from our donations. And if you know of such organizations or projects, please share your recommendations with us. And again, as of right now, we have received 3 recommendations, and we will present them at our first meeting of the new year. And for my final announcement for today, we are planning to organize more activities, as I mentioned previously, like book clubs on business, math, and algorithms, AI coffee talks, and invited talks. But for these, we will need more fundraising, so please don't hesitate to contribute to us. Will skip this because I'm sure most of you already know how to contribute to us. And here again is our spreadsheet for uh, for donation information. And finally, it takes tons of hours to make these investment lecture slides. So if you guys think you have learned a lot from these slides and these lectures, please introduce the Hoperation Fund to your friends so we can reach a larger audience. Okay, in November, we received $230 in donations from the following people here. And in November, 6 new student members and 2 adult members joined us. So as of December 6th, the Hoperation Fund has totally 67 members, including 17 adult members and 50 student members from 14 states. Okay, now let's move on to talk about the investment portfolio. So the return in November of our investment portfolio was 6.32%. The total capital in the Hoperation Fund investment portfolio has now gone from around $21,846 to $23,225-ish. Here's a screenshot of the investment portfolio. The year-to-date of the Hoperation Fund is now 43.9% since the beginning of this year. In November, I sold NVO, which is a European company that makes weight loss medicines. The reason for this is because Trump's tariff policy on imported goods or products from other countries will be a headwind to that stock. And And using the remaining money from selling NVO, I added shares to existing stocks. Mhm. As always, here is a comparison of the monthly returns of the Hoperation Fund investment portfolio, SPY, and QQQ. The return of the Hoperation Fund since its inception in June 2023 is now 77.8%, so almost 80%. So you can see we've come a long way from a year and a half ago. And now let's move on to our market analysis as of December 6th. For the market direction right now, I would say it is all bullish. From the short-term perspective, it is bullish, midterm is bullish, and long-term is bullish. The market sentiment, according to the CNN Fear and Greed Index, is 53, so in the neutral category. And I would suggest, for position sizes, I would suggest investing 80 to 100% of your investment portfolio in stocks. For bonds, I would hold very little, around 0 to 10%. And for commodities, I would continue to accumulate. I personally would avoid cash. And yeah. And now for the market valuation, the S&P 500's P/E ratio is now 31.17. This is pretty high since its P/E ratio a few months ago, as its P/E ratio a few months ago was around 26, 27. And the 10-year Treasury yield is 4.15%. So generally, when you take the reciprocal of the 10-year Treasury yield, you get the true valuation of the S&P 500, or a pretty good estimation of the S&P 500's true value. Mm, anyways, ag. So right now, if you take the reciprocal of 4.15%, I think that's around 24-ish. Well, yeah, 24, I think. Well, that is way lower than the S&P 500's P right now, which is 31.17. So you can see the S&P 500 or the market right now is pretty overvalued. I would consider this kind of risky. So this is just for you to make a note of. The market right now is really overvalued, I would say. So I think Emily asked the question, do you have any less safe options or more unique investment recommendations? Uh, Emily, what do you mean by that? Like, for
Things that might not be in like the S&P 500 or something like less known, you know?
well, I'd say for the S&P 500 is like a includes a lot of pretty major stocks. So I'd say if you're looking for like smaller, like small cap stocks, um, or like more unique investment recommendations, I say generally I'd lean toward like stocks in the S&P 500. But I later on I will also provide some later on in these slides I will also provide some or some other investment recommendations and in later meetings too. As of as of now, I don't really know what you mean by more unique investment recommendations, but if you follow along, I will get to that um, later. Okay, so now let's move on to talk about um, the stages of the stage of the economy and the stock market we're in right now. As I said previously, again, the stock market is the stages of the stock market are different from the economy. As the stock market is usually a leading indicator of the economy. So as you can see from this visualization here, um, you can see the stock market and the economy move at different times. They're not like aligned. It's important to know what stage of the economy and the stock market you're in, as generally different sectors uh, will be beneficial in different stages of the economy. So it is good to know like what sectors can profit from what stage of the economy you're in. So wait, first of all, can you guys guess what stage of the economy and the stock market we're in? Like, just make a guess. Like from any recent articles you read or recent stock news. Okay, wait. Okay, sorry. How do I pronounce your name again? I'm really sorry.
It's okay.
Wait, On?
Oh,
Okay. Sorry. Said market top. Yeah, that's really close actually. Thanks for um thanks for saying that. Does anyone else have anything? Okay, and Emily said market top too. Okay, does anyone else have um anything they want to add? Like, okay, so right now I'd say we're in the mid-expansion stage of the economy and mid-bull market. So near the market top, but probably not like at the market top yet. Mm. s- So in this stage, I say sectors such as technology, industrials, basic materials, and energy are good for investing in. But yeah, Om and Emily, you guys were really close. But again, this isn't exactly like a 100% factual thing. This is my idea of where we are. So it can vary a lot. Uh, it can vary slightly, but yeah. So now let's move on to our investment lectures for today. Hmm. Today I will talk about something called a Santa Claus Rally first. Do you guys know what that is? Okay, no one knows what the Santa Claus Rally is? Okay, that's okay. The Santa Claus Rally actually is an investing term for this phenomenon where the stock market goes up a lot in the last week of December and in the first few days of the new year. Generally, this is a pretty strong seasonality pattern, so you can potentially profit from this, or you can just think this is an interesting seasonality pattern. Next, I will talk about how to search up like stock charts, and then I will go on to talk about commodities and commodity ETFs, as some people were asking about that last meeting. And finally, I will end with an open discussion with a review of Costco's returns and my predictions I voiced last meeting, and as well as a step-by-step guide on how to invest in ETFs. So a Santa Claus rally is a term used to describe the phenomenon where the stock market jumps in value during the last week of December and into the first two trading days of the new year. There are a lot of theories as to why this happens, from tax considerations to investors buying stocks with the holiday bonuses. Some also believe that the rally is caused by the temporary bullish optimism of investors during the holidays, as when they're celebrating with their family or relaxing, they will they will be more optimistic about the stock market and invest in it more, or from retail investors investing their holiday bonuses. Other people insist that the Santa Claus rally is related to increased holiday spending. Historically, the Santa Claus rally has occurred 76% of the time between 1950 and 2019. The market has risen an average of 1.3% each year during that period. However, over the last 10 years, from 2010 to 2020, the stock market only saw an average Santa Claus rally of 0.38%. And in some years, the stock market has also declined sharply during the days. For example, from 2014 to 2015, the stock market, or the S&P 500, experienced a decline of 3%. So I just included this in today's lecture because the Santa Claus Valley is a pretty interesting seasonality pattern. And while it's not a super strong seasonality pattern, um, you could potentially use this to your advantage. But also, this is also relevant to us right now as the holidays are coming up and as well as the new year. Okay, so speaking of investing, it's also important to be able to search up your the stocks you are interested in and see the returns or the line charts. So you can enter the website finance.yahoo. Can you guys see my screen, by the way? Yeah. To search up like the graphs of a stock and to be able to see it more in detail instead of like searching it up on Google, you can go here and input the symbol of a stock or an ETF. For example, hold on, this is loading. Wow, okay. So here you can see this is the chart. You can click here to open it up more into an interactive chart. Here you can plot things. You can change the range of the chart from 1 day, 5 day, 1 month, 3 months to like 5 years. And you can set the interval to like 1 day, where you can see each period of time is smaller to 1 week. Um, oh, I think someone asked a question in the chat. Sebastian said tradingview.com is amazing for charts too. Yeah, I think that website is also really good for charts too. I am using the Yahoo Finance this website because this is also a pretty good website too, and it has a lot of useful features too. But yeah, thanks for the recommendation, Sebastian. Mm, okay, so you can see you get this chart here, where this is the latest closing price. You can also like change the settings of this or the style of this graph from a line chart. You guys know a candle chart, right? Uh, there's even like bars, different types of charts. So this is really useful if you are searching up a stock and you want to see its like recent returns. Okay. And now let's move on to the third part of our lecture today, commodities. So some of you guys were asking about commodities last meeting, I think. Commodities are basic raw materials or primary agricultural products that can be bought, sold, or traded. They are essential inputs in the production of goods and services, making them key drivers of global economic activity. So some typical categories of commodities are energy, metals, and even agriculture and livestock. Although I wouldn't necessarily recommend investing in agriculture or livestock, but they count as commodities too. So for energy, some commodities are oil, natural gas, and coal. For metals, there are gold, silver, copper, and aluminum. For agriculture, there's wheat, corn, coffee, cotton, and for livestock, there's cattle and hogs. The general purpose of investing in commodities is to, number one, diversify your portfolio, and number two, hedge against inflation. Commodities can also benefit from specific stages of the economic cycle. Actually, right now, we are in the mid-expansion to mid uh, and mid-bull market stage. This is actually a really good stage to invest in commodities. So how do you invest in commodities? An easy way to invest in commodities is through commodity ETFs, or ETFs of companies producing these commodities. So for oil and natural gas, two commodity ETFs are USO and UNG. Related ETFs, these aren't commodity ETFs, um, but they are related to oil and natural gas, are XOE and XOP. XOE is the ETF of companies in oil and gas, and XOP is the ETF of oil and gas exploration companies. So while these aren't commodity ETFs, specifically since they're ETFs of companies, they are related to oil and natural gas, and while they won't have like the exact same returns, um, they are somewhat related. Another commodity is gold. So common commodity ETFs of gold are GLD, GLDM, OUNZ, IAU, and SGOL. I think um the difference between them is I think GLDM is cheaper than GLD, and and as for the commodity ETF OUNC, you can go to its website, I think, and fill out the form and present that to your broker. So your broker can trade in your shares of OUNC for real gold. So that's a cool commodity ETF. Related ETFs for gold is GDX, which is an ETF of gold mining companies, and GDXJ, an ETF of small gold mining companies. For the commodity silver, there are the commodity ETFs SLV, SIPR, and PSLV, as well as the ETFs SLI for silver mining companies and SILJ for small silver mining companies. Mhm. For the commodity copper, we have the commodity ETF CPER, as well as COPX, the ETF of copper mining companies. And for the commodity uranium, this is used in like nuclear power factories, I think. You have the commodity ETF URA. The ETF URA, which is the ETF of uranium related companies. Mhm. So Arya asked me, which ETF would you prefer, GTX or GTXJ? Honestly, I'd say it depends. GTX is the ETF of gold mining companies, while GTXJ is the ETF of smaller gold mining companies. So it really depends on like what I'm aiming for. Like if I'm aiming for maybe smaller cap companies, or if I'm just aiming for like gold mining companies, or like especially larger gold mining companies in general. Um, yeah. Sebastian also said lithium is cool too, and Ohm said URA is not doing really good right now. Yeah, well, uh, again, like these commodities can also have some variety, like right, like some commodities aren't like uranium aren't doing very good right now, but generally, I'd say for like general commodities such as like gold and oil and natural gas, I'd say it's they are still good for investing in around this um around this part of the economic cycle. Mm. So a common commodity, gold, um, I think gold is one of the most common commodities to invest in, and gold is also used as a hedge against inflation. So right now inflation is rising a lot, and therefore, um, I would honestly recommend investing in gold. Historically, gold has increased an average of 15.4% on a year-over-year basis when inflation exceeds 3% in the US. So generally, gold is a pretty good investment when there's high inflation rates. And next, let's go on to our open discussion. Last time I Last time I talked about the seasonality patterns of Costco in November, and I talked about how Costco has had positive returns in every single November since 2009. So can you guys predict what the return of Costco this November? Wait, so do you guys know what the return of Costco this November is? Anyone, does anyone want to take a guess? Okay. Okay, Arya said 7%. Yeah, that's a pretty good guess since like the returns of Costco have generally been around 6 to 8% in November. Ohm said 7.2. Okay, Emily said 7.6. Chloe said 9%. Okay, does anyone else have any guesses? Yeah, this is all really interesting. Actually, though, this might surprise you guys. The return of Costco in November was 11.32%. Now, this was massive. Yeah. This actually exceeded my own predictions, which I thought were around 6 to 8%. So now I have a follow-up question. Why does Costco stock have a significantly positive return in November? Do any of you guys have an idea? This isn't necessarily like a right or wrong answer, but does anyone want to um add why does Costco stock have a significantly positive return in November? Okay, um,
Black Friday and Thanksgiving and also Christmas is coming up, so and Costco's usually has good deals and yeah.
yeah, exactly. That's a really great idea. Does anyone else want to like add something else? They have Chloe?
I'd say I also agree with Alms, but I say because like for the past around 2 decades, it has grown. So like the seasonal patterns basically shows that Costco will like 99% of the time will grow during November. So that's why it significantly has a positive return.
Yeah, excellent, Chloe. That's also really interesting. Yeah, Sebastian, do you also have anything else to add?
I think it's because the S&P had its best November in like 20 years.
Oh, wait, Sebastian, sorry, I think my computer glitched a second because I couldn't really hear your voice. I think it's my internet connection or something. Could you repeat that again? Sorry.
The S&P had its best November in I think like 20 years.
Yeah, that's interesting too. The S&P 500 might be related to Costco because like the stock market generally, yeah, the stock market generally does really well in November. November is actually the best month for investing in stocks. So yeah, that's a factor too. So all of you guys had really interesting ideas. Actually, I agree with all of you guys. Uh, as um as said, since there's a lot of holidays around November, like Halloween, Thanksgiving, Christmas, people generally flock to Costco for like Christmas decorations or for food items to prepare for like Thanksgiving feasts and Thanksgiving dinners. So Costco has a lot of revenue in November. Also, um as Chloe said, this seasonality pattern of Costco having like high positive returns in November has also been noticed by a lot of investors. So um they also will invest in Costco around the beginning of November, driving the price of Costco higher and basically making its returns in November higher too. And yeah, again, as Sebastian said, the stock market generally does really well in November too, as a lot of consumers are buying more things for the holidays, maybe potential gifts, etc. But yeah. So again, this is a really interesting seasonality pattern, and you can keep this in mind in future Novembers to invest in Costco because there's a super high probability that it will have high positive returns. And so now let's go on to our open discussion for today, building our portfolios using ETFs. So here I will teach you guys how to like select and buy ETFs based on your own preferences as um after all it's important to like to actually invest in the stock market too instead of learning theoretical stuff off like books or anything. So I will guide you through a few of these steps. Please note though that the answers or like the examples provided in these subsequent slides are for educational purposes only, and you shouldn't take them too seriously for financial advice. So I will include some examples like using different stocks. I wouldn't recommend you take this super seriously, but yeah. The first step though is to define your investment directions. So does anyone know what an investment direction is? Okay, again, this is like, does anyone know what an investment direction is? Okay, an investment direction basically is just a, s- a set of like characteristics or a set of things you look for when you're selecting stocks or in ETFs or investments in general. So, so does anyone want to add like what do you personally look for when you're looking for an investment? Do you look for like the market's okay, whatever. For the market sentiments or like for some of it, or do you mostly base it off of its fundamentals, its momentums, etc.? Okay, Arya said reliability. Does anyone have anything else to add, or does anyone want to like voice their own opinions? Again, this is a really open question. Like there's no right or wrong exactly. Everyone has different investment directions they have in mind. Okay, uh, Emily said stability. Om said overall